What are the current major challenges that MFI sector is facing currently? And with the overhauling issues regarding the delinquencies, how has that impacted the sector overall sentiment?
Maybe a major problem like COVID, which is cutting across the geographies, or it could be a state-specific problem, just like what we happened in Andhra Pradesh, or even district-specific problems. But these problems used to be there here and there.
TransUnion CIBIL plays a big role is to bridge the information asymmetry gap. Now that's where a bureau plays the maximum role to it.
Hello everyone, welcome to our YouTube channel. India's microfinance sector today stands as a powerful engine for the financial inclusion. While the recent reforms aims to strengthen the credit discipline and the borrower protection, but the true potential of microfinance sector will lie on how they balance the growth and the responsibility. While all eyes on the microfinance sector today, is this the right time or the decade of the microfinance sector? Let's dive into this deeper with our special conversation with our special guest, Mr. Jiji Mammen, Executive Director and CEO, Sa-Dhan, who brings in 36 years of experience in the field of microfinance and having had multiple roles in NABARD and also being the founder, MD and CEO of Mudra. He is a pioneer in the microfinance landscape. Alongside, we also have Mr. Natarajan Ramani, Chief Product Officer, TransUnion CIBIL, who brings in deep expertise in credit analytics and financial inclusion strategies. Mr. Mammen, it is great to have you on our podcast. And it's amazing to see that you have more than 3 decades of experience in the field of microfinance. With this overall as a backdrop, can you throw some light on how the microfinance sector overall has evolved in past years in terms of the growth and the trends of business?
Thank you, Shefali. It's my pleasure to be here and talking to you and Natarajan. When you talk about microfinance, in India, microfinance evolved way back in 1974 when Seva Bank was started. But Seva Bank was a small initiative in Ahmedabad, which was confined to that particular city only. It was a cooperative bank for the self-employed women, for their convenience, for their financial transactions. They created this cooperative bank, and that is still working well. It's completed 50 years. But since it was confined to only a particular place, Ahmedabad, it's generally not talked when we talk about the microfinance. The actual microfinance movement in the country started in 1992 when SHG Bank Linkage Program was started by NABARD. And also glad to say that I was part of the movement from the beginning, as part of NABARD officer. And SHG Bank Linkage Program was basically to have microcredit through the banking system. So the SHGs were a conduit to provide the microcredit from the banking system. At the same time, in 95-96, another movement started in the form of microfinance institutions. Specialized institutions were created for the purpose of extending credit to the poor people. And when we talk about microfinance, generally we talk about this model. SHG Bank Linkage is also a microfinance model. It is the world's largest microfinance model. But then when we generally talk about microfinance, it talks about the microfinance institutions giving credit to the borrowers through this JLG model. That is Joint Liability Concern model. And if you see the microfinance institutions from 95-96 onwards, it's almost completed around 30 years now. We find that it has gone through several cycles of ups and downs. Right from 2006, 2007, if you see, we had some problems or other happening somewhere. Like the original initial problem started somewhere in Karnataka, in Kolar district, then in Krishna district of Andhra Pradesh. They were all small, specific geography-based problems of over-leverage, repayment stress, those kind of things. But when we came to 2010, it became a larger problem engulfing almost the entire state of Andhra Pradesh. And that is the time when Andhra government stepped in and came with an ordinance. So that was a major setback to the industry, because microfinance at that time, I think it was around 12,000 or 15,000 crore industry that time. But bulk of that money was in that state. Around 60-70% of the portfolio was in that state. So when government came with that ordinance, it was a major setback, and the industry had a big shock. But then subsequent to that, we find that then Malagam committee was appointed. They went through the sector. They came up with a regulatory structure, and again the sector grew. And then came the demonetization. That was in 2016. Again, suddenly the cash was sucked out of the system, and there was a liquidity problem. And that is a time when again the sector had a problem because the repayment, it was all cash-based transactions. So there was suddenly the cash was not available. That was also overcome. And again in 2020, we find that COVID came, which was the mother of all problems, I would say. And again, the sector went through this problem. So what I was trying to say is that this sector had faced ups and downs on and off. Maybe a major problem like COVID, which is cutting across the geographies, or it could be a state-specific problem, just like what we happened in Andhra Pradesh, or even district-specific problems. But these problems used to be there here and there, and the sector was had the resilience power to overcome this kind of a problem anytime. And whenever some problem came, I would say that it came up with much more strength, with better processes or practices, and it always came out of that. So that's how we find that from a 12,000 or a 15,000 crore industry in 2010 or 12, today it went up to 4.4 lakh crores last financial year end. Of course, the previous year we had a degrowth. So this is how the sector has been, and sector will grow, and this is huge, as you rightly said, it's a great enabler to financial inclusion in the country.
I must say that's a great growth story to know. Thank you for that. Threading on that, my next question is to Mr. Ramani. Of late, there has been a lot of spotlight on the microfinance, especially with the asset lending piece. This as a backdrop, can you help us understand the role of TransUnion CIBIL as a credit bureau? How can they help the MFI lenders in terms of taking a better business decisions, and reduce the business risk, particularly entailing the defaulters?
Thank you, Shefali. I think before I answer that question, maybe a step back towards how this industry is totally dependent on credit. Now, if India has to grow many bounds in the near future, credit will play a very dominant role for the country's growth. Now, over the years, what we have seen is retail and MSME has been in the forefront of the credit growth. Micro lending, for example, has seen, as Mammen sir was talking about micro lending, that is one of the most important elements which not only helps the rural consumers but also helps the urban consumers. Now here, the microfinance institutions has played a stellar role in the way they have curtailed the various institutions, the way they have done the overall growth of the economy, and the way they have countered the multiple cycles which this economy has seen. Now, however, akin to any lending business, right? For example, everyone goes through cycles, right? We have seen retail, we have seen MSME, and we've seen microfinance go through multiple lending cycles. Now, one of the key information I think which factors all of this is information asymmetry, right? Now, this is where TransUnion CIBIL plays a big role, is to bridge the information asymmetry gap. Now, that's where a bureau plays the maximum role to it. Now, how do we help there? We obviously help in aggregating loans and inquiries across a borrower, across multiple institutions, and ensure that the lender, before he underwrites a consumer, knows a complete 360-degree assessment of the borrower, right? Now, that's where we help and we come in. Now, over the years, we've also seen that in retail and MSME, whenever there is an incipient stress, right, we've seen the lenders acting fast on it, right? We've seen lenders acting fast. Now, obviously, this is coupled by two factors. One is a superior risk management policies which the banks apply, and second is, which is we facilitate a lot, is TransUnion CIBIL gives itself a lot of insights on consumer behavior, a lot of insights on portfolio insight reports, which help lenders to take much more better informed decisions. So thereby, even for microfinance industry, TransUnion CIBIL is in the forefront of giving this information to lenders to enable better informed risk decision making to lenders.
I think that's very, very insightful, and thanks for that perspective. Building on this, my next question is to Mr. Mammen. According to you, what are the current major challenges that MFI sector is facing currently? And with the overhauling issues regarding the delinquencies, how has that impacted the sector overall sentiments?
See, microfinance sector serves the weaker section of the society, the vulnerable section of the society. And because of that, it is very sensitive to the external environment. Any kind of a change happening in the external environment, that can impact the sector. Be it a climate change, that we have seen the last year when there was a heat wave across the North Indian states. There was a dip in the collections. When general elections were happening, election period is normally a period when the recovery goes down, because there are several reasons. There could be some false promises happening. Somebody must be giving a false promise. Anybody giving any kind of a statement, that can also impact the recovery. So climate is a reason. If economy itself is not doing well, that's another reason. So what I was trying to say is that any external events or a factor can affect or impact the sector, and that will be resulted in a recovery issue or recovery problem. Currently, what we are seeing is that there has been a collection stress. There has been I would say, collection stress mainly on account of the over leverage. And how this over leverage has happened? If you see after the COVID, when the sector came back to the normalcy, suddenly you found that there was a huge demand for credit. And for the lenders also, there was a huge appetite for lending, because 2 years almost they were not able to do good business. So suddenly you found that there was demand, this external environment was looking good, and there was the need to lend more. So that has resulted in some kind of over leverage at least in certain pockets. But it happened across the country. Everywhere this kind of a thing has happened. And because of that, suddenly you found out there was a recovery issue also coming. And why this over leverage happened, that also I would like to say. See, one is that after the COVID stress, the economy did not come back to the old self. It was still in a slow growth period, So economy was not doing that well. Inflation was higher. As I said, there was a general election during last year, which extended almost 78 days, which was the longest, I believe. Then there were climatic events like heat wave, as well as flooding and cyclones in some parts of the country. All this left to a condition where people needed money, but they were not able to get money of their own income, so they resorted to borrowing. And as I said, there were several lenders also ready to give money, because they were also in a mood to build their business. So in the process, you found that the people with more than 5 loans went up beyond 3% at one point of time. I believe it has come down significantly now. It is around 1.5% only. If you see the number of people with 3 or more, it was as high as some 7 or 8%. So that is something which has caused a stress in the recovery, and that has impacted the sector, and that is the reason for the current stress. And apart from this, there are also events like there was a Qarz Mukti Abhiyan Qarz Mukti Abhiyan by some of the people. They were advocating against the repayment of loans. In northern India, we found started in Punjab, Haryana, and in spread across other parts of the country. Similar kind of campaigns are also happening in some of the geographies. So that also added to this, and to add to all these worries, suddenly you found that there was a ordinance in Karnataka state, which although has exempted the regulated entities, it has created a lot of confusion in the minds of the people, whether it is all the entities are covered or not covered, which is a regulated entity, which is not a regulated entities. So this has impacted the recoveries in Karnataka very much. So this is the problem. This is all resulted into a kind of a larger problem, and that is how the sector had some kind of a setback in the last financial year.
Thank you, Mr. Mammen. That's really a great perspective, and I think it adds up a lot of value to this conversation. And threading on that, my next question is to Mr. Ramani. As we all know that TransUnion CIBIL had been supporting and partnering all lenders and credit institutes in terms of taking better business decisions, especially in the commercial and consumer segment. Are there also real-time solutions like that available for the microfinance sector? If so, then how are that going to shape up this lending industry better?
Sure. So again, a step back maybe, and answering this question into two aspects. One is, for any solution to be effective, there are four most important elements. One is how comprehensive the information is, how quickly are we disseminating the information, how effective a solution is, and the last one, which is most important, is how effective the usage of the solution is. Now, having said this, TransUnion CIBIL has always been in the forefront of these products and solutions, and not only from launching these products and solutions, but also working very closely with credit institutions to ensure that these solutions are used to the utmost optimum manner. Now, having said this, for example, if you take an example of MSME, right, or all the commercial entities, our products like CV CMR or CV Algos has been in the forefront of each of this decision making, wherein lenders have used this in a more optimum way to ensure the credit risk is lower. At the same point in time, they also ensure that how they can grow their books more profitably. If you move to the other side, other spectrum of retail, the synonymous product of CIBIL Score or the Credit Vision Algos or consumer triggers has helped every lender in the institution or every lender in the country to ensure that they do two things very well, right? And as Mr. Mammen was talking about, right, one is widening the base and one is going deeper in the base. So what I mean by two, when I mean widen the base, is you find the good customers and you fund the good customers. When you go deep in the base, what you try to identify is within the same set of portfolio customers, how do you assess those customers from a better credit quality perspective so that you don't over leverage, right? How do you assess early warning, to rightmost example, and ensure that you don't keep on lending to the same consumers again. So this is where TransUnion CIBIL helps in the various products and solutions. Now, coming to the second part of the question, which talks about particularly on microfinance, what are the main products and solutions what we have to offer? Now, starting with the basic microfinance credit information report. Now, what does it help a bank to give? It helps banks assess the 360-degree view of a microfinance consumer, of the loans taken across all the microfinance institutions, basis that which a lender can take much more informed decision. Now, an interesting fact is, over the last few years, we've also seen the overlap between a consumer and a microfinance borrower increasing, right? Now, to help with that, we have something called as a CIBIL combo report. Now, how does that help? It helps an institution to look at all the loans a consumer has across both the consumer bureau as well as a microfinance bureau. Now, to do this, the lenders can use this information not only from a lending aspect, but also from an inquiry aspect, and to assess the credit hungriness of a borrower. The third aspect, which becomes extremely important, is it's not about only finding the good customers and funding the good customers. It's also about ensuring that you monitor the customers very well. right? So that ways we have our portfolio review reports, which the lenders use very effectively on the consumer side and on the MSME side to ensure that whom they have lent, how they are performing on a day-to-day or a month-on-month basis. Now, how does that help? That helps in a lender to fine-tune its cross-sell strategies, its acquisition strategies, its upsell strategies, and also the collection strategies. So thereby these three products enable the microfinance institutions in a much more granular way.
Thanks, Mr. Ramani. I think that's very, very insightful and certainly very promising for the overall lending industry. Shifting the gears a little bit, let's focus on the outlook of the MFI. And for that, my next question is to Mr. Mammen. How do you see the overall future of microfinance in terms of the overall potential opportunities, the way forward and growth?
In fact, before I take that question, I just wanted to add to what Natarajan has talked about. The kind of analytics and insights which we can bring in on a borrower based, that would be quite useful in growing this sector. Because as you know, for the last 25 or 30 years of microfinance movement, it was following a particular model. That is, money was given to a group of say 4 to 8 members combined to form a joint liability group, and the money was given on the basis of a joint liability concept. In a joint liability concept, if somebody is not able to make a payment, others will chip in and make good that payment. That is a joint liability concept, because everybody is responsible for the repayment of the entire loan. But now what we are seeing is that suddenly you find that the JLG concept is getting slightly weakening. One is that the group size itself is getting smaller. Number two, the loan ticket size has gone up. Maybe from 20,000, 30,000, now average is around 52,000. So suddenly, if somebody defaults, then others find it difficult to chip in, because the EMI itself is something like 2,500. Earlier is to some 500 rupees or 600 rupees EMI. Now it has suddenly become 2,500 or 3,000 rupees. So that is one reason. Secondly, the group concept is also slowly eroding because of people find it that, see, if it is only to make a payment, why should I need to go? I can send through somebody else, or I can make a payment through digital mode. So that is also coming into the way. So in the process, you find that joint liability group concept is getting weakening. So there probably the kind of analytics and kind of the data information if credit bureaus like TransUnion CIBIL can give, that will help the lender to give little more detailed underwriting of the individual borrowers, keeping the group intact, but some more additional analysis can be done, underwriting can be done, which will help the sector to grow. Now coming to a question about the prospects. Definitely I feel there's a huge prospect for microfinance, there's no doubt about it. There's a reason you find more and more new players are coming into the field. The market is so vast. In fact, there was a study done by NCAR in 2022. They had projected a total credit potential of something like 17 trillion Indian rupee by 2027. Whereas we have reached only some 4 lakh crores, that is 4 trillion Indian rupee only. So there is a huge market there. But then problem is that we need to widen the market. Even now, if you see, the market is concentrated on few states and a few districts. It is concentrated in around, say, 10 states, I would say. 10 states contribute around 82% of the total portfolio, and 5 states contribute around 56% of the top portfolio. Similarly, if you see the district-wise also, around 200-250 district contributes around 80%. So there is a lot of unserved geographies available. So you need to expand it. When it may not be that easy, I can admit that also, because going into some of the deeper geography will not be that easy. Probably we need to make use of the technology to some more better way, so that we can reduce the operational cost and reach the remote and far away places. So that is number one. Number two is that we also need to see how individual enterprises can be supported. See, so we have been giving loans to the group to serve the individual person's interest only, or through the group we are giving individual loans to serve the individual person's loan needs. There's also a need to grow these businesses. So for which you need to have larger loan ticket size. But when you do larger loan ticket size, you need to have better appraisal techniques, better underwriting techniques. So that also has to be done. So there's a huge market before us. There's a huge potential available to us. So I see a huge potential for this sector, and in the next maybe another 3-4 years, you can almost see the double of this the current portfolio size by maybe after 3-4 years. That's what I
Thanks for that perspective, and that certainly shows a lot of potential for the microfinance sector and a bright future too. Keeping that in mind, my last question to Mr. Ramani, how do you see the customer awareness, particularly for the credit discipline, can also help the overall ecosystem?
Absolutely. I think a great question to end the session. In terms of, if you look at from an individual perspective, right, credit scores are very vital, not only from achieving the growth and aspirations of a consumer, and not only from that perspective, but also from ensuring that lenders get very confident in ensuring that these are the right set of customers to lend to. Now, whether it's buying a home or financing an education loan, or in financing in terms of a business loan, the CIBIL score plays an extremely vital role in the awareness and in ensuring that the consumer gets it. Now, not only from accessing of loan, but also from ensuring that the cost of the loan is optimum, CIBIL score plays a very important role. Now, lenders over the years have started practicing risk-based pricing. Now, when they practice risk-based pricing, a lot of their interest rates are also dependent on the kind of credit scores or CIBIL scores or their internal scores which lenders adopt. Now, these go a long way in ensuring that not only the consumer gets access to credit, but apart from getting access, ensures that the cost of the credit is lower from their side. Now, having said all of this, as TransUnion CIBIL, one of our foremost objective is to ensure financial inclusion in the country. Now, financial inclusion in the country can happen by two means. One is lenders going out in the market and widening the search, widening the customer base. Second is ensuring that how consumers are credit aware, so that when they go and take a loan, they perform well, so that the lenders in turn get the confidence. Now, in aid to achieve that, TransUnion CIBIL has taken the effort to launch two distinct programs. First program is called as a CIBIL Jagran, wherein what we do is we go all out in the market, we partner with institutions and to ensure that the credit awareness, the consumer score awareness is well there across the entire ecosystem. The second aspect, which is called as a CIBIL Saksham, is how we are empowering the credit institutions through the credit institutions, their credit underwriters. That what is risk management about, what is credit risk management about, what is CIBIL about, how to read a credit report. So between these two programs of CIBIL, we are ensuring that financial inclusion is at the forefront of TransUnion CIBIL, and thereby we help lenders and consumers to ensure that they take the right decisions in ensuring the way forward for each of them.
Absolutely agree with that, Mr. Ramani, and that brings us to the end of the podcast. Thank you, Mr. Mammen, and thank you, Mr. Ramani, for such valuable insights. As we wrap up our today's podcast, we underline the fact of the matter that microfinance sector is not just about lending, but it is all about dreams, building resilience, and transforming communities. The journey ahead is full of promise, and together we can build the inclusive finance as a powerful force for change. Thank you, and that's our CIBIL Sandesh.